I'm excited to bring you today's video because with all the changes that we've seen with the Inflation Reduction Act of 2022, we actually have a very unique situation here between January and March, and it has to do with which cars are going to qualify and for how much money. So in this video, we're going to cover all the vehicles that are going to qualify right now for tax credits. And because of the unique situation that we are in, these vehicles are going to qualify for the entire tax credit. So the situation that we're in right now is we are in 2023, which means new rules apply for which vehicles are going to qualify for tax credits. With these new rules, we're also missing some guidance. That guidance is required to determine exactly how much of the $7,500 tax credit each of these vehicles is going to qualify for. As you may recall, the Inflation Reduction Act of 2022 does break that $7,500 down into two sections. $3,750 if the battery critical minerals come from North America, are recycled in North America, or come from a free trade agreement partner with the United States. In addition, another $3,750 comes from the battery components being assembled in North America. So the situation that we're in right now is the Secretary has not provided any guidance on critical minerals and battery components. As it sits in this moment, as long as an EV is assembled in North America, it will qualify. Now, in lieu of having critical mineral requirements and battery components, the Secretary has given guidance that until they provide that specific guidance, each vehicle will continue to be graded based on the previous rules, which means it has to be at least a 5 kilowatt hour battery, and it will increase each kilowatt hour up to the cap of $7,500. So this old rule will continue, but all the other new rules are in place. So MSRP caps are in place. The vehicle must be assembled in North America. Your income has a limitation. Those requirements are definitely in place. But if the vehicle is assembled in North America, it has at least a 5 kilowatt hour battery pack, it will get up to that full $7,500 tax credit. Real quick though, if you keep coming back and you haven't yet, please consider subscribing to the channel. Also, by hitting that like button, it helps tremendously. So how this is going to work is once the Secretary gives its guidance on each of these two categories, the battery critical minerals will need to come from North America, recycled in North America, or from a free trade agreement partner with the United States. Do keep in mind, most batteries come from China today. CATL is the largest producer of lithium batteries, and even Tesla sources some of their batteries from CATL. They are that large. After we get this guidance, any of those batteries that come from CATL or from China in general will not qualify. So there are vehicles on this list today that get their batteries from China. Therefore, they will not qualify once this guidance is provided. That second requirement of battery components being in North America basically means the battery needs to be made here in North America. It starts at 50% and then walks its way up from there. So it's going to be very tricky to have a battery from anywhere else that's going to be able to achieve this target at 50% or more. Although right now we do not have that guidance, they did recently release a statement saying that they intend to issue that guidance in March of 2023. So like I said, in the meantime, it's all going to be based on the old rules with a 5 kilowatt hour or larger battery with a step up from there. So how this works is you get a base credit of $2,500 for having a 5 kilowatt hour battery. You get $417 additional by having a 5 kilowatt hour battery, and then $417 per kilowatt hour thereafter, up to $7,500. There is one other thing that I do want to clarify because I have misreported this previously and I want to continue correcting this every video that I can. This is a non-refundable credit. I know I've said it's refundable in the past. It is non-refundable, meaning you have to have tax liability in order to claim this credit. So if you only have $2,000 in tax liability, you're only going to get $2,000 back as a part of this credit, even if the vehicle qualifies for more than $2,000. So because it's not refundable, you can only get up to the maximum of your tax liability, or $7,500, whichever is less. Also, do keep in mind these tax credits this year will not be realized until you file your 2023 taxes, which isn't until 2024. And these do not become a point of sale credit until 2024. At that time, you can sign this credit over to the dealer in which you purchase from. They can apply it to the purchase price of the vehicle, which will also save you some taxes. But that doesn't happen until 2024, so these credits that you get now, well, you will not actually get them until 2024 when you file your taxes for this year. So let's take a look now at the list of vehicles, starting with the vehicles under that 55,000 MSRP cap. The BMW 330e, the Ford Escape plug-in hybrid, the Ford Mach-E, the Chevy Bolt EUV, the Cadillac Lyriq, the Nissan Leaf Plus, Tesla Model 3, standard range, long range, and performance, the Tesla Model Y 5-seat, the Volkswagen ID4 two-wheel drive, and the Volvo S60. Now, there is one vehicle on this list that I have highlighted in red that does not qualify for tax credit because it exceeds the MSRP cap of $55,000. The Cadillac Lyriq is too expensive at a base price higher than $55K. Now, just last week, Tesla changed the pricing structure on the Model Y, so now the 5-seat Model Y does indeed qualify under that $55,000 MSRP cap because it now starts at $52,990. Now over to the $80,000 list. Audi Q5 e-Quattro, BMW X5 45e, Ford e-Transit, Ford F-150 Lightning, Lincoln Aviator Grand Touring, Lincoln Corsair Grand Touring, Rivian R1S, Rivian R1T, Chrysler Pacifica plug-in, Jeep Wrangler 4xe, Jeep Grand Cherokee 4xe, Tesla Model Y 7-seater, and Volkswagen ID4 all-wheel drive. Of this list, all these vehicles will qualify, but the R1S is very close to that maximum $80,000, so keep an eye on that if that is a vehicle you are waiting on. So what I've done is I've sorted these by price. And when you look at it this way, you're going to find that there are some incredible values to be had in some of these specific units. Starting with the $80,000 list, we have the Volkswagen ID4 as the absolute lowest cost $80,000 MSRP cap vehicle you can get after the credit at $40,295. The Lincoln Corsair only has a 14.4 kilowatt hour battery pack, so it does get a slightly smaller credit than $7,500 because of that. Aviator has an even smaller battery at 13.6 kilowatt hours, so it also gets a slightly reduced tax credit. Now, when we look over at the $55,000 MSRP cap, this is where things get spicy. The Chevy Bolt and the Chevy Bolt EUV are the two cheapest EVs you can get today in the United States after that tax credit. At $26,500 minus $7,500, $19,000 for the Chevy Bolt. For the Chevy Bolt EUV, which is slightly larger, $20,300. Now this comes with 259 and 247 miles of range. Keep that in mind because the second cheapest, the Nissan Leaf, starts at 149 miles of range and caps out at like 226 miles of range. This is an incredible value. If you are in the market for a second EV or you're considering an EV for around town, you should very seriously consider a Chevy Bolt at least now through March. Continuing on the list, the Volkswagen ID4 close to the middle at $31,500. After those credits, the Escape Hybrid gets a slightly smaller credit because it has a 14.4 kilowatt hour battery pack. Ford Mach-E, as long as you don't get a top level trim. All trims of Model 3, including the Performance, because of the recent price changes at Tesla, and that Tesla Model Y 5-seat. The Cadillac Lyriq, again, too expensive to qualify for these tax credits. That is the complete list of every vehicle that qualifies today for a tax credit. And again, almost all of these get the full $7,500. Only 3 exceptions, but there's still over $6,000 in credits for those 3 that have a slightly smaller battery pack. Come March, we will get guidance from the Secretary, which is going to put in effect these new rules: battery critical minerals and battery components. Once that goes into effect, a lot of these vehicles are going to fall off the list very quickly. And it's going to take time for manufacturers to make pivots and change manufacturing locations and develop a supply chain that's going to be compliant. So a lot of things on the works, but in this short period of time, if you're considering any of these vehicles on this list, you should very seriously consider pulling the trigger between now and March before this guidance becomes public. So with that, I hope that you enjoyed this video. If you did, of course, give it the thumbs up. If you haven't already, of course, subscribe to the channel as we continue to post content regularly. You can follow us on Twitter and Instagram at Bearded Tesla. Thanks so much for joining us, and we'll catch you next time.